Sup guys, Christos here. In today's video, I'm going to be sharing the free stocks that I'm going to be buying this November. As always, everything mentioned in this video is going to be my own opinion and you should always do your own research before you invest, but you already knew that, so let's get started. Okay, so the first company that I'm going to be investing in this month is one that I've spoken about a lot recently on this channel, and that is DraftKings. Now, if you didn't know what DraftKings is, it's basically a gambling company that was founded in 2012 where you can essentially play daily fantasy sports, casino games, and of course the ordinary form of sportsbook betting. As mentioned, it was founded in 2012 and it actually went public on the Nasdaq exchange recently via a SPAC on the 24th of April 2020. Just taking a look at some key stats about the company, it currently sits at a price of $47.83. It has a market cap of roughly $19 billion, which is relatively a small company in the grand scheme of things, and it actually doesn't have a current PE ratio yet because it's not a profitable company, which is absolutely fine because this company hasn't been around for too long. Moving on to some quick things I like about this company. First things first is that it's in a very new and growing niche. Well, in America anyways, because basically it was only up until 2018 where gambling was in fact illegal in most states in the country. This was until a Supreme Court struck down an existing law that prevented different states from acquiring an online gambling license. If we fast forward to now and taking a look at this graph right here, you can actually see the majority of the states have now submitted to get their gambling license, and when these are eventually accepted, companies like DraftKings will essentially be able to open up for business, bringing in thousands of new customers and revenue to their company. For me, I just see this as such a great opportunity to grow a business without really having to put too much investment or work into it, because at the end of the day, when millions of people have been suppressed by something that they had to travel across the world to do, are now able to do it, they're naturally going to go onto all of the leading platforms, and DraftKings is definitely one of them. But having said that, another thing I really like about the company is the forward thinking and innovation from the management team. I personally believe that they thought way ahead about the new potential states that could be opening up for gambling, and in the meantime they have managed to strike exclusive partnership deals with all of the top leagues to bring exclusive content and games, which eventually is going to give them a larger market share over its competitors. I'm also really impressed with one of their most recent plays, which is a move into the world of NFTs. Once again, they have noticed that this is a completely fast-paced emerging market, and they have noticed that NFTs and sports can go really well together, and this one they have just taken full advantage. And I guess the final thing that I like about this stock is that I personally think it's completely oversold. As you can see here, it's down roughly 20% over the past 6 months, with the most recent drop in September, and I can't really find anything that shouts out to me to say that any of this was the actual company's fault. What I think has actually happened here instead is that in September, when most stocks have had a slight pullback, DraftKings, just like a lot of the other growth stocks, got hit harder than the rest. And for somebody like me that really is just starting to get on board with the fundamentals of this company, it's a really good opportunity to now get involved. But just to finish on this one, I think what I found here is a solid company, a business that I like, and a service that I actually use myself. And I just think with the overselling of this company without no real rhyme or reason, investing into this one with a 2 to 3 year plan minimum for me is definitely going to be a wise move. Okay, so the next stock that I'm going to be buying is Facebook. Now, I don't think I need to sit here and explain exactly what Facebook does, but things are changing around the company, which I'm going to get into in a second. Just taking a look at some key stats about the company, we have a market cap of 868 billion roughly this time, so a lot bigger than DraftKings. So to say, the stock price is currently $312.22, and over the past 3 months this stock has actually been crushed. If we just take a look at this chart right here, we can actually see that the stock actually hit all-time highs of roughly $384, and right now it's sitting at around $72 less than that. Now, this is because of a number of reasons, and the main one is the recent acquisitions made by a Facebook whistleblower saying that the company were ignoring documents knowing that their social media platforms were actually causing harm to teenagers, and they basically just ignored it. There's so much other stuff to this whistleblower document. Basically, what she was saying is that Facebook was ignoring all of the warning signs and they weren't thinking about their customers. And this, of course, had a negative effect on the stock price. We did also just receive earnings from this company, which was a little bit of a mixed bag, but one that I wasn't too disappointed with, which I'm going to get into in a second. We have a PE ratio on this company of 22.34, which isn't too bad, but this has dropped quite a lot recently since the stock price has obviously dropped as well. Now, when it comes to talking about some of the reasons why I actually like this stock and why I will continue to invest into this company for the foreseeable future, despite all of the negative things that have gone on around this company. The first thing is, as you may or may not already know, Facebook just isn't the Facebook website anymore. Right now, it's actually a collection of massive companies like Instagram, WhatsApp, Oculus, and of course this new metaverse project that Mark Zuckerberg seems to be pushing big lately. But essentially what I'm trying to say is that this company and this stock can't be judged on its first ever platform, which is the Facebook website itself. There are so many other big and thriving businesses that this company actually owns, and this is going to really benefit this stock in the future. Now, the second reason, and I think this is a big one, why I'm actually investing more into this company, and that is if the past 3 years has proved to you something, that is Facebook right now simply can't be stopped. In 2018, we had the entire Cambridge Analytica scandal. We almost had from there every single month a new campaign to delete Facebook. And of course, this month we've had the whole whistleblower thing, amongst so many other issues that they've faced along the road. And despite all of these roadblocks, Facebook has always came out stronger. And that just tells me, if you're a long-term investor, this stock right now, to me, feels like it's almost bulletproof. Yes, I know the stock has dipped a little bit, but if we just take a look back at 2018, which was when I actually first invested in this company, this stock was roughly $170. Now, I invested into it. It went all the way up to $200. The scandal hit, it dropped all the way back to down to like 120. And now if we take a look at the stock, it's sitting in the mid 300s. So it just goes to show that no matter how many roadblocks are thrown at this company, they always find a way to improve and innovate. And for me, this is just going to be a really good play over the next 5 to 10 years, as long as they continue to keep doing that. Now, the next company I'm going to be investing into is one that has definitely featured multiple times during this series on the channel, and that is going to be Tattoo Chef. This is a stock that I have been invested into now for a good 6 months after actually first hearing about this from a fellow finance YouTuber, Financial Education Jeremy. And after doing my own research, as everyone should always do, I feel like this one really fits the bill in the terms of a stock that I'm actually looking for. Just taking a look at some numbers on this company, it currently has a stock price of $17.69. It has a market cap of 1.45 billion, making it by far the smallest company that I currently invest into at the moment. And if we just take a look at the stock price over the past 6 months, you can see it's been very much an up and down period. It's kind of fluctuated anything between kind of $17 and $22, making this stock almost the perfect swing trading stock out there. And this is in fact something that I can see continuing for the short term, so to say, but in the long term, I think this is going to be a really good company. And let's get into that now. Reason number one, and that is this company is an extremely high growth stock, and despite last earnings being slightly underwhelming, if we just take a look at the last 2 years when this company has been trading as a public company, we can see that it's improved significantly in terms of its revenue growth. As you can see here from this chart, when we take a look at its debut year in the stock market, it actually managed to pretty much double its revenue in its first year of trading. But like I did mention, it has slowed down a little bit in terms of picking up its pace. But one thing that you can definitely tell is that this chart is trending in the right position. And like I said, to go from 43 million or 47 million in a year on its opening year in the stock market, all the way up to 183 million in 1 year is really good growth, and it's something that I'm still very happy with. Another thing that I really like about this company is that despite it being such a new company and still growing extremely fast in terms of its frozen food side of the business, it's realized that if it wants to be a major player in the kind of healthy food and vegan game, they're going to need to expand past this, and they've already actually started taking steps to do that. In May, they made a massive acquisition of the Mexican tortilla factory in a bid to move towards more fresh-based meals. And literally in the past week, they have just announced that they have purchased another company called Belmont Confectionaries, which is basically going to allow them to offer healthy vegan-based snack bars. Now, being able to offer all of these different variations in their products is actually going to help these guys manage to expand from that frozen aisle to all over the different stores. And by the way, they're in so many of the big stores in America already: Publix, Target, Walmart, Sam's Club, Kroger, just to name a few, Costco over in the UK, Costco in America as well, of course. But just being able to offer all of these different product lines is obviously going to help them become this leading brand in the healthy eating sector. Now, one thing that actually did concern me a little bit about this company, and I have to mention it in this video, and I did actually briefly mention it just a moment ago, and that is the earnings. And I'm not, of course, talking about their earnings in terms of profit, as they don't currently make any at the moment because their business is still really new. I'm talking about the most recent earnings call where, like I mentioned, the company still showed good growth, but it was nowhere near the trajectory that analysts were expecting. So essentially, when it comes to me actually making a decision on when to buy this stock, one thing that I think I'm going to do is actually take the risk of seeing how earnings go, which are actually going to be reported on the 10th of November 2021. If they manage to smash their earnings and the stock shoots up, then just so be it. I took that risk, and I'll be still happy to invest after that, as I'll be really happy with the way the company is now progressing. However, if earnings do disappoint for 2 months in a row, because obviously the last one wasn't exactly the best, as long as the earnings call kind of explains the issues and the resolutions as to why they haven't been growing as fast as analysts predict, I will likely go heavy into this stock again, especially if it drops below that $16 mark. Either way, I think there is a really high chance that I will be investing a healthy portion of my capital into this stock this month. But having said that, that concludes the 3 stocks that I'm going to be buying in the month of November. Now, are you interested in any of the stocks that I just mentioned? If so, make sure you do let me know in the comment section down below. Also, if you haven't already joined, then make sure you go and check out my free Discord group where we talk all things stocks and investing. The link will be in the description down below. But other than that, I'll catch you guys in the next one. Take care.